If you are retired or near retirement, you are going to want to stick around for this video because the story I'm about to tell you involves someone that is in a dire situation, someone who thinks that they're going to literally go homeless because of cover call ETFs. And they wanted to share a story with me. And once I saw it, I knew I had to speak with this person. I had a 2-hour conversation the day of recording this video. So everything has kind of come together pretty quickly, but I thought this would be, as I had asked them if I could kind of share details of like what had happened to them. And they said, hey, look, if it helps someone, avoid what I went through, then I'm all for it. So for privacy's sake, I'm going to kind of keep things a little bit vague, but we're going to touch on every single frustration that they basically talked about in this video. And we're going to try to help some of you guys get back to basics. Some of us really need a bit of a wake-up call. You know, a lot of the content I typically create is more country club in nature. We're going to just breeze through some cover call funds, talk about the yields, talk about the distribution increases, but this one is entirely different. We're going to be coming at this from a surgeon perspective, working in a hospital, where ideally we can, as a community, maybe help this person out in the comment section, maybe with words of encouragement, maybe similar stories, but the story you're about to hear, it is one that is a tale as old as time. So anyways, let's get into that. Day of recording, I wake up to an email, and this person's, just telling me how they are frustrated with, they've put a bunch of hundreds of thousands of dollars into cover call ETFs. They're frustrated with a particular fund. It's nobody is surprised by this one, MSTE. They're frustrated with the fund, frustrated with the fund manager, frustrated with creators that talk about it. They're frustrated with this like WCB thing, which is a workers' compensation and injury thing that they've been dealing with for past many decades, and it's just endless. And some of the stories this person told me about the people involved on the the agency's end of things, just things that slow down, things where they don't believe his story, spying on him type stuff, like wild. So there's that. And then as he had told me, he's like, look, the biggest thing of all is just how I just attacked all this with my learnings. I kind of came at it from a desperate situation to start with, which, I mean, right away is more than likely going to lead to rash decisions. And no matter how you invest, you can insert the word income, insert the word growth, insert the word dividend investor. It doesn't matter. If you come at investing from coming at it to rush into it, rash decisions, just wanting to get something quick out of it, it is more than likely not going to end the way you expect it to. So anyways, I want to try to hit on some of these points with everything that this individual had mentioned. There's a lot of frustration baskets that we can kind of pick out from. So let's attack the first one, MSTE. Okay, for starters, it is a single stock cover call ETF. These things are wildly popular in both the US and Canada. It's been a more recent phenomenon in Canada. Now, keep in mind, the ETF in of itself is just a wrapper. ETFs, that's all ETFs are. They just hold underlying assets. So really, what are we actually talking about here? We're talking really about strategy, or whatever it's called nowadays. Strategy B, MicroStrategy, MSTR. That's what we're really talking about. Michael Saylor, Bitcoin Treasury. I have a peripheral understanding of what this company is about, but really no more than that. I don't really invest in Bitcoin stuff unless it's in some sort of diversified fund. Then I am more willing to accept exposure to it through diversification, not through a single stock ticker. So let's just be clear about that. The MSTE, what we're really talking about is the underlying asset. Now, the thing that makes it more frustrating is the fact that the leverage, 25% leverage, amplifies the losses. But again, if times are good, it's amplifying in the good times as well. So I understand the frustration on that end of things as well. Now, leverage is pretty common across the cover call ETF industry here in Canada, so it's not like the fund is out of line in of itself. So we're really talking about strategy and an added frustration from the leverage component on the down end of things, which is really too bad for the fund manager Harvest. I'm sure they're getting just call after call after call on this, and I'm sure everyone is just wondering what's going on with MSTE. Well, what else can they say? It's really about what's going on with MSTR. That's really what it comes down to. Some of you might say, why would they even create this fund in the first place? It's super high risk. I mean, it is risky. Any single stock is risky against a diversified fund. Well, they're in a bit of a damned if you do, damned if you don't situation, because when this fund was created, it was created based on investor demand. If they never created it, they'd be in the same situation. They would be getting raked over the coals from the do-it-yourself investor crowd who really want to invest in a single stock cover called ETF. So unfortunately, it just works both ways. Unfortunately, this fund is going to enter into the lexicon as, if there's another fund that dumps hard in the future and it's got a cover call on it, people are just going to refer to it as it's MSTE all over again. So that's on the ticker side in of itself. So let's address that one frustration there. It's really the underlying asset. The second one is Harvest. This person thinks that Harvest is gonna either close down the fund or just move or merge it with something else. So let's be clear what Harvest most likely will do with this fund, which is nothing. This is a popular fund. I believe, off the top of my head, over 100 million in AUM. Harvest, the last time they closed down ETFs, both ETFs were under 10 million, and they were under 10 million for like a year. That's not MST. Is it going to get merged with anything? Well, it's already inside HHIS. It's already inside HHIH. And because it's inside HHIH, it's also now going to be inside of HDIF. So now it's kind of all over the place. So unlikely that's going to get closed down. These guys do have, they believe in this ticker. They're sticking by it. They recently did a video with Adriano. Always helpful to see the fund managers talk about funds, whether it's successful or not. I appreciate both stories, but unlikely that really anything extraordinary is going to happen with the fund. So that's their sort of take on the control. As far as the reputation, these guys have been around for since 2009. Personally, I really have not had much dealings with them. I've never contacted them. They've never contacted me. I've talked with Michael Kovacs, their CEO, once at a Blossom Social event in Vancouver in 2004. I would have been 14 at the time. In 2024. So I got light exposure to them. I'm not really I'm not protecting a sponsorship or something if there is speculation there. So they're reputable. I would say here in 2025, they are probably the top dogs of this year. Now, all the fund managers are really close. They are. It's not like whoever's in the one spot, the two spot is like drastically behind. And in my opinion, all these fund managers have rotated in and out of the top spot. I can remember, when HDIV and HYLD, when they were created, Hamilton was in the top. Then when they came out with a couple of their maximizer funds, they were in the top in 2023. And then all of a sudden, Global X just totally nullifies that. And they release a leverage version of all their cover call funds. And all of a sudden, they were the top dog. So it's an ever rotating group of who's at the top. But honestly, whether you're second, third, fourth, if you're somewhere in that range, I think you're doing just fine. and I also own a couple of funds by Harvest as well. So I've been really happy with my experience with them. But look, when any provider comes out with like 40 or 50 ETFs and they're geared towards income, especially single tickers, it's probably just the law of averages. At some point in time, one of these funds is going to just absolutely disappoint the investor crowd. And right now, that's MSTE. So we've talked about the fund, talked about the fund manager. Let's talk about the actual creators that this person is frustrated with, the people talking about MSTE. Now, from what I'm seeing online, how are people talking about MSTE? Usually this is coming around in the format of talking about it in the sense of portfolio reveals. Now, typically with content creators in the finance space, portfolio reveals are typically popular content. And if you do it on the regular, the audience appreciates it. It's good for clicks. It seems to be good for everybody. The audience likes it because the finance creator is open. It shows that they have skin in the game. It actually builds trust with the audience because it's not like, you're talking about these funds, but then you're not showing that you're investing in them. Like, you're showing that you actually have conviction in what you're doing. You're like, practice what you preach, so to speak. So it does work well on both sides. The creators like to do it. The audience members like to see it. And that's actually an important one. As much as like investors, we need data. We need to make informed decisions based on, back testing, historical data, and all the rest of it. But another huge component, and it's massive, is the human element. Is we see people online, how are they actually sticking to their guns? Are they weathering the storm? And what are they learning that they can pass on that could be useful tidbits of knowledge for the investors on the other side of the camera? So that's typically where MST is really being talked aloud about, is investors or other creators investing in it. Maybe because they really do believe in the Bitcoin story. They believe in the Michael Saylor Treasury Bitcoin story and everything that's going on there. I can't speak to other people's convictions and really like what is the nitty gritty of like what they see behind that. To me, again, as long as if you believe in something, you're doing it well, you have conviction behind it, you're getting all the research as best you can. I mean, it's just, look, it's hard to argue with that, because especially if you have interest in it, you're like, I'm investing in this because it interests me. That's a huge component. If you learn to cultivate the interest in investing in general, and you educate yourself around it, it's hard to argue that, the returns typically kind of come alongside that. You're taking your time, and hey, you're in it for the long haul. But a lot of like success, just if you're to boil down success in finance, it really does have to do with cultivating an interest in finance. And hey, investing in ordinary things can lead to actual extraordinary results. But once again, past results are not indicative of future returns. That's always important to understand there. Okay, so we've talked about the fund manager, the creators. It really is a lot, especially if a lot of creators kind of talk about the same thing. You start to thread the needle. If all the creators are talking about it, then it must be a good thing. So the other component with this is the due diligence part. It's the part of the story where we kind of lock in on the desperation side of things. Like, I needed the income, so MSTE was going to provide that income, but now it's not because the distribution's been cut. So if you are retiring or near retirement, all I can say is most likely you probably want your portfolio to be as boring as possible. So you can actually focus on the things that you actually care about, being with family, working on the garden, I don't know, maybe go to Vegas and race in a souped up car on a track or something. I don't know. But ideally, it's so you can experience these other stuff, and this stuff just kind of works in the background. So what do I mean by that? So my theory around investing in cover call ETFs is actually a very broad, simple one. It's touch all corners of the economy, so that effectively the economy takes care of you. Another way of putting it is when you are diversified, yes, you're gonna pick up a lot of losers, but if you are bullish that the economy is gonna grow, well, the winners are gonna outstrip the losers, and ultimately you see that growth regardless. So in a nutshell, that's kind of how I approach it. The guardrails I put in place for myself are no single tickers of any kind. I got into ETFs to make my life easier. If I'm in stocks, I find that I don't understand most companies. I don't understand how they're all big, they're all huge, but what I do understand, what I am interested is macro trends. This is, when does oil typically go up, or when is it better to rotate into a defensive sector? Like, those are the kinds of things that I like to pay attention to. I do not at all like paying attention to, which I think it really is the backbone of investing in stocks, which is learning about qualitative and quantitative metrics, learning about balance sheets and income statements and cash flow statements. So there's a lot there. There's way more to it than that, especially when you have to get into quarterly reports and investor guidance outlooks like that. That's too much for a guy who works a lot and has, soon to be 4 kids. That's just too much. I enjoyed it for a season when I first got into investing, but quickly realized this was not going to be a sustainable, successful strategy for myself. ETFs are really where it's at for me personally, so that I can focus on these other important things. So what kind of guardrails can we put up regardless of, hey, that rhymed, of whether we're retired, near retirement, or even if you still have many decades to go? Well, I think the big one is just stay diversified. Diversification will be your friend. It protects you against the fear of missing out. I find, for me personally, it really suppresses the temptation to to buy or to sell something. That's much more muted. It's not that you'll never get rid of that, but it's certainly those opportunities. Well, not really opportunities, but those moments are usually few and far between. I get better sleep because of it. I pay attention to my portfolio actually less. The only time I really pay attention to it is just to keep up on content and share that with all of you. Usually if I'm excited about an idea, I usually give it about 24 hours before I make it a full-on decision about whatever that is. But usually this is also another good rule, because you get bored of that idea. You realize you come back to your original strategy that you've been investing in, and it's like, you know what? I'm actually good with that. I find that to be actually pretty effective. But again, I'm not looking for anything exciting. It's I stay diversified because I'm just bullish that the economy will grow. That's really the meat and potatoes of how I invest. So I stay away from single stock, anything. Doesn't matter the strategy. I typically stay away from gold and Bitcoin, and I stay away from fixed income. Now, I do have exposure to Bitcoin. I have exposure to fixed income, and I have exposure to gold in various diversified sense. I don't mind having some light exposure in a diversified fund if it looks like that small amount actually helps out the broader fund to perform. And so, fixed income, I actually like it in BMAX. I think it's actually a really effective. It's an effective allocation in a multi asset ETF like BMAX. Barrick Gold inside of Etchy. And that's like a concentrated cover call ETF invested in Canadian stuff. So I don't mind that. HHIS and Biggie. Now these are the concentrated mega cap stuff with higher yields and higher price potential there. But I don't mind I haven't minded the like Coinbase and the strategy. Now strategy is kind of weighing down on some of these, especially say like Biggie. However, I'm thankful that again it's diversified, so the other components can really act as the shock absorber for when a fund or a position like MSTR does go down. It's gone down in my portfolio, but it's like low single digits at this point. Once you include total return, it's like low single digits. So thankful for that. Thankful for the diversified funds because it's allowed me to just sleep a little bit easier. Okay, so with all that being said, we talked about the funds, the fund manager, talked about creators, talked about some of the guardrails that we can put up in place. And so really, how do we actually solve a problem like this? Well, another aspect, which is just a story as old as time. This is something I told the individual. Unfortunately, it falls into the hope, which is not a great investment, but I just, all I could do was really just share another story that a family member of mine had experienced, and this other family member of mine had invested in a lithium stock, and it went up and then it went down and it stayed down, and then it stayed down for forever. I told my family member, like, get out of that thing. Like, this is just weighing on you. It's not worth it anymore. I've been in the similar situation. I've had a fund that's weighed down on me. I needed to move on from it. I cut up my loss. I was down 10 grand on something back in 2022. And anyway, my family member, they stuck with it. And wouldn't you know it, Trump tweet comes to the rescue on this fund. It turns out the American government wants a stake in this lithium company that shoots that lithium thing to the moon. He stayed into it for a few days, sold it off. He had to back up the truck, bought some more cover call ETFs. The irony is that he ended up buying some MSTE on top of some other stuff. So, and now he's in kind of asking the same questions as this individual that I talked with today about, which is what's going on with MSTE. And so that's another tale as old as time type stuff. It's just something's been down, gets kicked around, and then eventually, who knows? No one really knows for sure. But I'm not here to, again, I'm here to listen, because they clearly just needed someone to like hear them out. I'm not there to this is what you got to do, step 1, 2, and 3, and ABC steps will get you there. It's like that they're already answering their own. They basically told me, they're like, well, I'm not going to get rid of it. It's just, it kind of is what it is at this point. But you just don't know. I mean, for all the people who didn't get into MST in the summertime, it looked like they were falling behind. And now those people falling behind look like they're ahead. And maybe they'll look like they're falling behind in the future. Nobody knows. So no doubt this individual has been going through a lot of different frustrations for a lot of underlying reasons. And there was certainly more to it. But again, I was trying to keep it fairly vague and just kind of hit on the different key points that this person had shared with me about. Now, that all being said, that they're down huge, right? They're kind of near retirement. It's like, this is not exactly an easy hole to get out of. Now, one of the things I did ask them, it's for our culture, it's not a pleasant one to have to really address, but it's, hey, do you own your home? He's like, I do. I'm like, well, I mean, you know what? At least it's something. That's something me and my wife did. We sold our condo. Obviously for different reasons. We didn't think we were going to be broke or anything. It's just we couldn't tangibly see getting up into the next step up of home ownership, like a townhouse, or else I'd be married to the mortgage. And I didn't want that. I do not want that at all. So rent has become the way we're going to be living for now. And I've been able to take that money and plow it back into cover call ETFs. So at least for this person, I mean, they told me that like their house is like the family hub. They got grandkids that come by all the time. And so that's, at least right now, that's like, I guess, out of the question. It's just, I mean, look, for everybody out there, when push comes to shove, if you need cash, at least having an asset like a house, at least it's something. So that's certainly probably going to be, as time kind of goes on here, and if real estate just sort of kind of doesn't do much, right? People are going to be asking those questions. Where can I get a better return on my money for? Will it be my house? Will it be the stock market? I mean, those questions are already happening. They've been happening for many, many, many months already, especially in this current market environment. So let this be a reminder that, yes, construct your portfolios, do your research, listen to the various voices. Doesn't have to just be cover call ETFs. Listen to all the different channels, get as many different perspectives. It will only make you a wiser investor, especially with people who, they don't agree with this stuff. I mean, you're gonna cherry pick from everybody. And I think that there is something worthwhile about just doing that. Because if you only listen to one name and you only invest like that, if you invest, and I say this all the time, if you just invest like me, I am bound to disappoint you, because my goals are not yours, and your timeline is different than my timeline. It's just a law of averages. It'll happen. So I hope a video like this can, and especially for the individual that I spoke to, they were pretty. They were quick to point out that, Jordan, it's not you. Appreciate what this conversation has meant to that person. It calmed them down, and I think that ultimately that's just if I could just do something, and if it at least helped them kind of stabilize their emotions, then so be it. Okay, there's obviously more work to be done there, but that is up to that individual. So let that be a lesson for everybody when you're constructing these portfolios. Right? Have some guardrails in place. Don't get too greedy with yield. And when you're investing, protect yourself where you can. I'm 100% investing in cover call ETFs. I will continue to be invested 100% in these things, continue to share stories. If you like stories like this, then obviously hit all the buttons of like and subscribe variety. I think in the near future here, we'll be talking about funds that would be good options in a retirement portfolio. So I think we'll do that in a follow-up video to this. So once again, hit all the buttons of like and subscribe variety. I'll see you all in the next video.